You don't want seconds. You'd be out for days.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday, August 10th. I cannot believe it's August 10th already. Edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Jam-packed show for you folks today. Two guests on the docket. 8:15, we're going to be joined by Mark Chaikin, founder of Chaikin Analytics. And at 8:35, we're going to have JC Parets of All-Star Charts on the line. But between them, we got a lot of earnings to discuss. Still, retail taking the stage today. We're going to talk some post-earnings moves in Trip, Light, LIT, and Valiant Pharmaceuticals. And some IPO or some recent IPOs reporting. Snapshot later today. Blue Apron we had already. So going to cover as many earnings reports as we can. Joel, how are we doing this morning in the SPOOs?
Not too good, Spencer. Down at 9 1/4 at 63.75. Stalled right at Wednesday's high 74.50. Your current high 74 1/4. Keep an eye on that. That's the top of all those closes that we had as well. You have crude trading up 35 cents here at the highs of the session. Don't forget about the double top at the 40.50 area. Gold and silver continuing their rally. Gold up 7.90, trying to get to 1,300, and silver up 27 cents at 17.14. So some good action here. Dennis, how you doing this morning?
I'm having like deja vu Groundhog Day here because yesterday we came in and we were down. I mean, we were down a little bit more. We were down 10. We're down 7 here. I mean, it feels like the same thing. It feels like the same reason we're selling off. But why did we rally it all back yesterday? You know, is that just what we do? We're going to do the same thing maybe here today, just rally it all back, buy the dip. Buy the dip always wins. Like, why?
Well, yesterday we could have, we were talking about, the levels that we were looking at, and it did not take out that 9-day low. Found support right at the pre-market low, 59 even. We hit 59 1/4. Sellers dried up, very strong close. So maybe some people got caught a little bit because, rallying on the close, momentum on the open, but, how much emphasis you could put on news or the internals. I mean, Korea's kicking up their heels again, and that came out right at the 6 o'clock open. Didn't have an immediate impact on the market, but we just kind of trickled down. So you're right, Dennis, an absolute replay of yesterday.
Yeah.
To me, just look at yesterday's low, 59 even. If that holds, then we're going to get a replay of yesterday. If it doesn't hold, then we may have some serious to work on the downside. But right now, support is support until it's taken out.
I mean, it's so hard to come in here and be bearish, just like I was saying yesterday. And it's not that there's nothing to be bearish about. There's all kinds of things to be bearish about. I mean, the potential nuclear war here. But the market action punishes you every time you short. And if you came in yesterday, shorting the open saying, this market's not down enough for what this is, which, fundamentally makes sense, you got punished. We come all the way back. And so here I am, same scenario. Am I coming in here and selling this market? I can't. I mean, every time I sell the market short, I get hurt. And if I sell it in the hole. So same thing, buy the dippers seem to always win. I'm not sure when that story changes, but, there's lots of nice things to worry about out there. Market just never seems to care.
Nope. Geopolitical events are happening here. Stalemates in Washington on policies, and who cares, right? We'll talk with JC Parets when he comes on at 8:35, and boy, oh boy, I saw a $3,000 price target on the S&Ps, Dennis. So
From who?
JC.
This is JC saying 3,000.
Yeah.
How do you argue with it? I mean, it just keeps going up. Climb the wall of worry. I guess that's what they know where they get that from. Climb the wall of worry. Well, lots of worries here. So sick of talking about the S&Ps. Let's go talk about individual stocks because at least we get some movement there that isn't always just buy the dip. Retailers have reported here, a number of them this morning, and actually some disappointments, some beats, kind of all over the place. I want to start with Macy's, which just reported here just 5 minutes ago, right at the top of the hour. Spencer, quickly give us those numbers because Macy's is wild right now.
Q2 EPS of 38 cents versus a 46-cent estimate. Sales of 5.55 billion versus 5.52 billion. Comps are down 2.5%, and the adjusted EPS is 48 cents versus 46 cents. So the adjusted EPS is better, but comps are down and sales are bad.
I mean, here's the example. And stock's been beat up going into the report, really kind of sold off yesterday again. So you knew they say anything okay, it's probably going to rally. That's what we're seeing. We saw the wicked rally in cores. So, I was saying yesterday I was biased to go along this into the report. I didn't. But, I'm looking at it. But now looking at it, and I want to go to the Kohl's report here now, too, because we have some more information as well. Give me the KSS numbers, which was reported about earlier this morning.
Also, Macy's, I forgot to mention, reaffirmed their outlook for the fiscal year.
Yeah, that helps.
Yeah, that helps. Kohl's Q2 adjusted EPS of $1.24 versus $1.19. Sales of $4.144 billion versus $4.13. So about in line with that number, and a beat on the EPS.
Beat, and this popped big time, but it's given it all back. And that makes me scared to chase Macy's, because you take a lead from Kohl's here. Kohl's is obviously trading up, and now Macy's here trading up substantially. Kohl's is trading in the red here now. How high were we on Kohl's there, Joel? KSS pre-market high
45 even.
No, really?
Yeah. Yeah.
Who's buying these things up $3? I mean, these are the retailers that everybody hates, and somebody's coming out. I guess you just got to be out there. You know what? I think Macy's is going to go red too. Macy's is going. It's coming in right now. Macy's got a big pop. I think Macy's is going red too.
I'm not going to make a wager on it with you, but Kohl's did go from it came off a big rally from under 36 and got up over 44 2 days ago. So that really had a more substantial rally than Macy's. So people, Macy's went from 21 to 23. So not as big a pop, but I'm not gonna fade you on a wager on that. We'll do the technicals.
I'm gonna before you get done your sentence, I'm gonna be right. I just said that and it just went red. It was up. It was 23.70 when I just said that. I think it's gonna go red. I guess I should have just hit it. It gave you a lot of chance, eh? Gave you a lot of chance. I said it, and it just sort of turned around and went red.
All right, who's gonna confess in the room?
I just made 3% live.
Who just hit Macy's on Dennis' comments? Was it John Dotson?
Are the bots listening to me? Are they that on me? I just said that, and it just went red. How many seconds was that?
It was Beppy 59.
It was already coming down. It was already, the momentum was not on its side. So here you are.
Spencer.
These retailers, these are okay numbers. They still can't catch a bid. I mean, Kohl's up at 45, it's down to 41.5. There's no reason to own these things. These things are just hated. They're continuously hated. They even report okay quarters. It doesn't matter. Here they are, and you got Macy's going in the red. You got Kohl's. I mean, you're going to get pops. You're going to get short squeezes, the odd times in these things, but the trend is not your friend. Trend is down on these. I'm assuming when we have JC Parets on at 8:35, he's going to say the same thing. We know he's a trend follower, and he's probably going to say, I hate them all.
All right. Just made a pre-market low. Let's go to the Macy's, 22.70. That's not a bad area. That's going to be my area of the day here, because on the rally up in mid-July, you had 1, 2, 3, 4, 5, 6, 7 lows at the 22.70 area. So that's my number here. We just bounced off it. In Kohl's, this is a slippery slope here, because you probably got a lot of people caught on that dip. That continues to make new lows for the session. 41.20 is your pre-market low. Couple lows under 40. Let's call 40.80 potential support point, as you had 3 lows between 40.57 and 40.81. So nice call there, Dennis, live on the show. Was there any bids out there to hit, or it was?
You know what? There was at 50. It was 70 to 50, but I don't like to talk and then trade, at the same time there, because I don't want to, be the person that's, okay, I'm short this thing. Now I'm going to try to, say something and try to get everybody to follow. I don't like talking my book there, so I typically don't do that. So if I wasn't doing the live radio show, I probably actually would have hit the 50, but so live radio show costs me some money.
All right. Crude oil just flat.
Before we leave that, this is why, Joel, let me lead this, because you're forgetting Dillard's. You're talking retail here. We'll get to chat. We're going to get to the other things, but no sense changing the subject and then changing the subject back to retail here. I want to just talk Dillard's here. DDS is a mess this morning. This is your disaster of the day. Everybody in the whole world saying, oh, it's a real estate play. Oh, this thing's awesome. 60 to 85. Why would you not go and buy this hot stock? This is why. Because, here is your real estate play. Here we are 10 trading sessions later, after everybody had to own it on July 31st up at 83.44, wow. We are trading 60.75 here right now. It's down 13 points. Company is still in a world of hurt here. And I was saying even on this when it was taken off, I'm like, what is this real estate really worth? I mean, what is all this, big real estate play? They have all these, big, box stores, because if we're all going online, all this stuff isn't worth nearly as much as you think it is. DDS, Fuzzy, DDS, we're talking, Dillard's.
You want the number? 58 cents.
Yeah, give me the number.
All right.
Wound up today.
58-cent loss versus 35-cent gain in the same quarter last year. Ouch. Sales of 1.472 billion versus 1.44 billion. Comps down 1%.
Well, you know how well that real estate models worked for Sears.
You know what? You're coming here and saying these things. You're trying to find an excuse to buy it. And that's what the market was doing. The Dillard's was nothing more than a major short squeeze that started it. And then he caught a few late bloomers when the media started pumping it as a real estate play. It started as a short squeeze, guys. That's what it did. And when, you get this thing, if you look at the monthlies, you can, say it's $145 stock back in 2015. It got down. And, it got down to 45. And then the retailers started to catch a little bit. And then at 60, we broke out. And it was a classic breakout, technical pattern. It was gone. Media always finds another reason to say, and they'll say, oh, real estate play. No, it was just a short squeeze technical breakout, gone. And, it got overdone. And it's given it all back. That being said, that 60 level comes into play on Dillard's here now, because Dillard's was the old resistance that it broke out from. And we just kissed it in the pre-market. So I think DDS does have a bounce level around 60. So as a trade, I don't mind it down there. As an investment, forget about it. I don't want to own any of these big boxes.
All right. Dennis is targeting a couple lows that you had in the market surrounding the $60 level. July 18th, 59.86. July 19th, 60.21. We'll call that 60 even on the nose. I think, boy, if you had a short, though, you took a lot of heat at 60. It goes, let me go back to the daily highs. So, I mean, there might be some buyers here to be covering shorts. I don't know if this would be the best day to start initiating along in the issue, because you could see this is just a daily chart, folks. There's a lot of air underneath here, but 60 is a potential area of support.
Jumping over, you wanted to talk. Who was it? Where were you taking us, Joel, before I interrupted you and yelled at you for changing the subject?
I mean, I'm going to go sit in the corner.
Yeah, I was going to put you in the corner for changing the subject there. Where were we going?
Flack UK just asked about crude, and because it's coming up on that psychological, and I know you don't have crude futures, you can look at the USO, but I just wanted to point out to Flack UK that we are flirting with 50 here, just not super comfortable shorting it at 50 because there's air up to 50.41 and 50.43. That's a double top from July 31st and August 1st. So 50 psychological number. The fact that we traded through it those other days, 50.40 is my number on the upside. Dennis.
I'm a buyer of pullbacks on oil. That's all I'll say. I don't know if I'm coming up here and chasing when we're up on the day, but I'm a buyer of pullbacks. Why? I don't know. I just feel like it's the tide. Everybody's hated on oil here for the last few months. I feel like the tide's turning here a little bit. I wouldn't be surprised if we do challenge up at that 54.
Is it because of that email that Jason sent us a couple of weeks ago asking about?
What was that?
He was asking us about if you were bullish oil, what investment would you make?
Oh, that's a great question, because so many people come in and say, oh, I'm just going to go buy USO. But, you get hit, obviously, because that lags a little bit because the contango is always burning you. So, the better vehicles, I'm still going to say, are the oil stocks themselves. So I don't like to go the little ones because there's a lot of little companies that are still struggling at $50 oil. I like to play more of the big guns. I mean, the ConocoPhillips, it doesn't set up bad right now. I mean, 45.65. It's got a lot of resistance bumping its head up there against 46. It could take that out. It starts to look interesting to me. I mean, ExxonMobil, I was hoping it would get down in the lower 70s so I could buy it. It hasn't happened. It's kind of clinging to 80. I mean, there's some setups here. Chevron has already run. I don't know why Chevron took off. I guess it was the earnings report, but there's been a separation there now on CVX. So I'm hands off on that because I think it's run a little bit too far already. But, if you're in Canada, there's and I know we have some Canadian listeners. The one way I just play it there, because I don't follow the Canadian companies close enough, even though there's a lot of good ones there, I always just go with the XEG. So that's traded on the Toronto Stock Exchange, and that's the oil stocks themselves. It's not, buying oil, and that's why, and so you don't have a contango issue there. So XEG is interesting. I do own a lot of that in my investment portfolio. That's how I kind of get my exposure to oil.
All right, 8:15 now, time for our first guest. We're going to take a quick break and grab Mark Chaikin, the founder of Chaikin Analytics. So we'll be right back. Welcome back, everyone, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with Mark Chaikin. He is the founder of Chaikin Analytics. Mark, how's it going today?
Spencer, it's going well. How are you doing?
We are doing well. We're just trying to digest these earnings, and I guess what led the show so far has been retail. We were just kind of talking about Macy's and Dillard's and Kohl's. What is your take on these reports from this morning, these first real big retail reports?
I think there's disappointment in the marketplace. The expectation was that perhaps the retail stores had turned the corner. That doesn't appear to be the case. We had some hope based on what the apparel stocks did last week, with Michael Kors reporting much better than expected earnings. Before that, PVH. So I think there was some hope in the marketplace, and the stocks had rallied a bit before the earnings, but that's proving to be false hope.
Something that we've talked about on this show in the past is retail, is the retailers as a real estate play. Does that strike a bell with you at all? Does that matter? Do you care about that?
I think it's like the Liberty Bell. It's broken because Sears is the poster child for how that hasn't worked. I think, break up value in a company that's got producing assets, but I don't see the real estate play here. And of course, you've got a lot of shopping centers that are suspect in terms of their viability. So they're looking for creative ways to redeploy that space. I just think the retail sector has a lot more of a shakeout yet to come. Some of the smaller retailers are clearly not doing well. It's even spilling over into the fast food space, where you've got someone like Potbelly now in trouble. So I don't see retail as a good place to be. I'm not as spooked by Amazon as the rest of the market is, but clearly they're having an impact on the big box retailers.
So what do the reports from this morning do to you for the reports we haven't gotten yet? We got JCPenney tomorrow, and there are others due to report. So does this just make you bearish on the whole darn space?
Well, we've been bearish on the space. Our power gauge rating for the retail stocks has been bearish in the main and for over a year. JCPenney is sort of a reclamation project. I don't see how they get out of the spiral that they're in. And I guess they report before the opening on Friday. I just think there are better places to be than retail, and focusing on it, bottom fishing is not a place that I'd like to be. I've often called bottom fishing the most expensive sport in America, and I think there's been a bottom fishing in retail, and it doesn't look to me like it's the right place to be.
All right, let's talk about better places to be. I guess one of them would be the defense sector. Always fun to be in that when there's political headlines. We've seen that in some big defense stocks. In your view, is playing the defense sector the best way to play any sort of political risk like we're getting with North Korea these past few days?
I think the defense sector has been looking strong even before the rhetoric heated up with North Korea. Of course, if there's a nuclear war, as someone once said, doesn't matter if you're short or you're in cash. There's no place to hide. But there have been defense stocks that have just been knocking the cover off the ball. And now that we've gotten an escalation, obviously there's an emotional pull of money into these stocks. Probably not the best time to buy them. So you've got Lockheed Martin making new highs yesterday. Boeing, of course, with a fabulous earnings report a week ago, spiked up almost 20%, now pulling back to the point where it may be a buy. And then you've got some specialty stocks like L3, Simula's Triple L, which has been extremely strong prior to the run-up. They're in the electronic telecommunications part of the defense industry. So I think the industry is fine, but you're spiking up here, and that's got to be an emotional reaction to what's going on in Asia right now.
Are there any other sectors or subsectors or industries that you have your eye on for the next couple weeks or couple months that you think are due for a rally?
I still think the financials are very attractive. We haven't yet gotten that rising interest rate environment, which everybody had been looking for, but interest rates have stopped dropping, and the financials have quietly made new highs here, which is very interesting, especially in the insurance and the major banks. So I think what you've got to do is look for a pullback in order to get in at a better price. But you've got insurance companies like Allstate and you making new highs, and you've got some of the major banks that have quietly, and I say quietly because everybody sort of gave up on the financials when interest rates didn't spike up beyond, say, 230 to 240 on the 10-year Treasury. But quietly, after some really good earnings reports in early July, you've got JP Morgan Chase, which made a new high 2 days ago. What are you going to do here but look for a pullback and then go where you think the opportunities are, and I do think they're in the financials right now.
When you say look for a pullback, what kind of pullback are we talking about here?
I think you're looking at pullbacks of 1.5 to 3 days on these stocks. You're not going to get much. We've got a market that's in a very tight range, and what that means is that the stronger stocks just aren't going to pull back very much because there's money on the sidelines looking to get in. Interestingly, money is coming out of equities and into bonds. I think that's the wrong way to view the opportunities going forward over the next 6 months. So I think people who are looking for big pullbacks are going to be disappointed because they're just not there.
All right, Mark, you are hosting a webinar today at 4:15, how to protect yourself and profit in a market correction. Give us a little bit of a teaser to that. What's one way that we can protect ourselves and profit during a correction?
Well, one of the things that we're going to talk about is how volatility being so low, VIX being so low, there's the opportunity to protect portfolios or even profit on the downside very cheaply using vertical put spreads. You can go out and buy a put on the SPY or the QQQs, but you've got vertical put spreads which give you protection out into, mid-October that are so cheap that on a 3.5% drop in the S&P, you can make 300% on the spread, know what your risk is. So I think there are opportunities to both protect portfolios and also to profit by establishing bearish positions on some of the key market indices. And we're going to talk about that. We're also going to talk about the fact that we haven't seen a 5% correction since Brexit in June of 2016. We haven't even seen a 3% correction since before the election. So I'm not predicting that correction because people who've been on the sidelines waiting for it have been sadly disappointed. But we want to show people how they can protect portfolios and not be spooked that corrections are actually something you should embrace because A, they give you the chance to buy strong stocks on weakness, and B, you can make money on the downside if you position yourself properly.
All right, and I've put the link to the webinar in our chat. If you're not listening to this live and you want to catch it, you can do so by going to chaikinanalytics.com. That's CHAIKIN analytics.com/webinars. For that webinar, it's at 4:15 today, Eastern time. Mark, thanks so much for hopping on with us today.
Spencer, enjoyed it. Look forward to the next time.
All right, back to the S&Ps. Joel, any action for us right now? Anything going on?
Coming off the low a little bit. Our pre-market low is at 24.61. We're at 24.64. Really kind of quiet. First target on the upside here, if you're trying this from the long side, mid-range on the day is 67.75. That's only roughly 4 points away. And on the downside, surely keeping an eye on yesterday's low, 59 even, and a couple other lows in the 57 area. What's so funny, Spencer?
No, I'm laughing at the chat now. What's a correction? It's an urban legend, is what it is. I'm laughing at that. Nice one, Dennis.
I'm telling you, man, this is so hard for this market to go down. Like here, and I will say, in my 18-year career, I have made much more money on the short side than I have on the long side. And I'm sitting here, all these catalysts, all these reasons to come in here and short this market, and I'm scared to do it. So how many other money managers are the same thing? Nobody wants to short this market. Everybody's scared because every time you short it, you'll lose money. So if everybody's sitting there with the same idea as me, well, there's no shorts coming in. So you got to get natural sellers. So you got to get some fear out there. And the fear is just not there. Nuclear war isn't even spooking this market. I mean, this is the biggest honey badger market of it all. I think one day you're just going to, it's going to be something that actually bad is going to happen. This market's going to be down like 500 points. Everybody's going to be like, what happened? Well, everybody hit the panic button at the same time because nobody's hitting the panic button right now. Down 6 points is not a panic. Down to 0.27% of the SPY is not a panic. Believe me, folks, there used to be sell-offs. There used to actually exist. So, but I'm scared too. So until you change that mentality and the mentality of me too, that's the situation.
What's a panic button? I'm being facetious.
There is no panic button.
I know. All right. I mean, are you even going to put a sell key on your keyboard yet, or do you have it just programmed like you're going to sell? You just buy more.
I don't know. As of right now, I'm keeping my sell button.
But give me a level.
I'm still ready to strike.
Give me a level. Look at your spiders. Give me your spiders, because I know
I'm not coming here short down 7 because I saw what happened yesterday. Okay. I even said that we could end up going back yesterday, and I'm not going to change my opinion here today. This buy the dip mentality is just unbelievable. I've never seen anything like it. 18 years.
I gotta fade you.
They've got to buy every dip.
I gotta fade you here, and I'm not.
You want to do a bet?
I want to make a bet, but we're down 9, and I'm going to wait to where.
I'm not going to even bet. I'm sitting on my hands here because I think there's every reason for this market to go down. Okay. My logic says sell. Everything that is behind me says sell. I've seen this story play out before, but every time you do it, you're wrong. So I'm just too scared to do it.
Okay. All right.
That's where I'm at. So that's where I'm at. I'm not even going to make a bet with you here, Joel. That's where I'm at.
Okay. All right. All right, Dennis. We'll wait. We'll wait for your sell signal. But look at your SPY. Pull your SPY chart up for me. And okay. I have my S&P levels. You look at this. And I have it now. 15 of 16 closes between 68.50 and 74. That's just unprecedented here. Give me a level where you would start to, not an intraday breach, but like a close below basis to SPY.
245.
Okay. All right. Good.
I like 245 because you know why? Just look in the June, July. That's where we're bumping up on the SPY. We broke out from there. We're still above there. I think as long as we're above 245, the bulls are still in command. I like that number.
I
Start
agree.
getting below 245, get a close below there, maybe it gets interesting. But you know what happens? Is the way this works is every pullback gets bought a little bit. They're not going to give you a setup. It's just all of a sudden you're just going to come in and we'll be down 500 points. Everybody be like, what happened? That's how it's going to work. So nobody's going to get a chance to get out when it finally happens. But I don't know when that is. So I'm just going to sit here. My portfolio is kind of, relatively same amount of cash as it was a year ago. I didn't raise any cash over the last couple of weeks. Logic says I should, because if we go to nuclear war, these stocks are going down. But, if we don't go to nuclear war, which is probably the more likely outcome here, I don't believe we're going to have a nuclear war. We're probably going to be right back up at highs again. So I stay semi-fully invested. I've always had a little bit more cash than probably the average bear, but or average bull, no pun intended. But I'm sitting here just I haven't really adjusted my own portfolio. I'm still holding, 60 stocks or 70 stocks or whatever it is. I'm sticking with it because I ride the train. There's no reason to get off. Technically, there's no reason to get off, even though there's all these macro worries.
2 comments by Mark I liked. One is the most expensive sport is bottom fishing. I like that one. I'll have to use that one. I will give Mark credit. And then the other one is like, who cares if you're long or short if there's a nuclear war, right? I mean,
there you go. So if we all get blown up, well, it doesn't matter. Oh, well, I'm in better shape because I was all in cash. Your cash just blew up too.
All right, GE. A stock that we talk about sometimes, just kind of been quiet, about ready to fall out of the top 10 components in the S&P for the first time since I've been following that indicator. I don't know, a dozen years or so. Dennis, director, bought 100,000 shares. I mean, it's somewhat you don't care. Okay.
No, don't care. Director bought 100,000 shares. One thing, I have this in my investment portfolio. I've had it there for 17 years. I'm not selling it. Like I said, probably have gotten the money out in dividends, maybe twofold over that time. But I'm going to tell you on a technical setup here, I'm not interested in this thing until it gets over 26, which was the level that we fell from there just a couple weeks ago, or we fall under 25 and a quarter, because that was the low on that same day. So that green candle that comes back from July the 21st is my bogey. Get above 26, it starts looking interesting from the long side. Starts falling below 25, it starts looking interesting from the short side. I guess until then, it's just range bound.
It's building a base here. I mean, building a base to break down to 20 or go up to 30, it will have to be determined. I do like that 26, and there's buyers here, Dennis, under 25 and a half. You can see that low of the move, 25, 26. I mean, I just don't know what the catalyst is going to be. Earnings aren't going to be for a while. Deutsche Bank is not going to upgrade it. I mean, it's just a forgotten stock, but trading the range here has paid. But till you break over 26, there's your resistance point. I believe that drop down was from earnings.
Jumping over to Imbalance land, we just got those coming out at 8:30. Nothing really big to talk about here. Twitter, 30,000 to sell. We haven't talked about Twitter for a couple of days, so we should break down the technicals there. That's setting up and kind of looking heavy at 16, believe it or not. Baba, 20,000 to sell. So our buy and balance guy in Baba has finally gone away. It's been a couple consecutive days where there has not been buy and balances in Alibaba. So it looks like he's bought all the Alibaba that he wants. 160 looks toppy to me in Alibaba here too. Some of these individual, you just say the S&P still look good, and we've been saying, as long as SPY stays above that 245 level, bulls are still in charge. But I tell you, some of these individual stock charts don't look nearly as good. That Baba not making a new high is concerning to me on that last move. It got up there. I know we breached 160 just barely at 160.39, but then 2 days ago we got up when we couldn't get over 160. I think, that looks a little bit toppy there to me. A potential double top in Alibaba, which is concerning. And then I just want to say Twitter. I want to know what you think about the 16 level, because here we are. Yeah. We're hanging here, Joel.
It's not
We're
good.
hanging here. I think it's going to 15.
Yeah, it's just hanging here. There's no interest. You got the double bottom right after the earnings. This kind of had I'm talking about Q1 earnings report. Started out with a double bottom at 1576 and 1580. Boom. What are we holding in here? We're holding in, what are the lows? 1591. I mean, 1580, that's your bogey. If it breaks that down, you'll fill the gap from the prior earnings report. 15. That would be down 1482. Yeah. Looking heavy here. There's no interest. There really is no interest. Okay, 8:35 here.
Should we bring on JC live?
Yeah, why not?
Why not? All right, let's get JC Parets, the founder of All Star Charts, on the hopper. Hasn't been on the show in a minute. JC. Always love talking technicals, and I know he loves his favorite indices. So we're gonna go, JC.
Hey guys,
Hey JC, you're live on PreMarket Prep. How's it going?
it's going great. Thanks for having me.
Thanks for coming on. What's got your eye this morning?
Well, we're in the middle of summer. Market's a little dead, so headlines are going to get exaggerated. This is that low volume. The big boys are on vacation sort of environment, so there's going to be some air pockets. Maybe you're going to get some bigger moves, some outsized moves than that you normally wouldn't have if there was more liquidity, or if this was September or October for that matter. So I think it's just important to really be aware of the type of environment that we're in, so we don't kind of get lost in that shuffle. And then just respect your levels. We've been bullish for the last several months. I've seen no reason to change that tune. But we have some levels to the downside that we're watching, and if they breach and it suggests that more consolidation is necessary, then we'll have to back off. But we'll worry about that when the time comes, right?
We're on the line with JC Parets. He's the author of All-Star Charts here. JC, I'd love to follow you on Twitter, and I can back up your faith in this market on the sell-offs. You like for the candles to finish, but I like a post that you had yesterday. And JC, I just want to know if you're feeling okay, because in your post, you're talking about the S&P 500. So I just want to know if S&P 500 or the Dow. Why'd you choose the S&P 500 in this instance? Just because it's so widely followed?
Yeah, while I like to incorporate all the other indexes around the world and really come up with a weight of the evidence approach, it doesn't necessarily mean that we have to ignore, the S&Ps or the Dow. In fact, I love the Dow Jones Industrial Average. I think it's one of the most underrated indexes in the world, especially because it's only 30 stocks, right? It's very easy to rip right through it. You guys know me, I'm a huge dork. I like to rip through all 500 stocks in the S&P 500. So, but yeah, I think that the levels that we're watching, we have that stair step higher in the S&P 500, right? When we broke out above that 2450 level in July last month, that was a big deal. So we're still making higher lows and higher highs. So from a simple, higher lows and higher highs, higher lows, we are in an uptrend sort of conversation. That 2450 in the S&P 500 is a big one. If we start to fall back below that, then we are no longer making higher highs and higher lows. So we would have to maybe reevaluate any sort of short-term to intermediate-term bullish thesis and maybe be a little bit more cautious. But we haven't broken anything like that yet. So, I don't want to get ahead of myself. We want to, like you said before, have faith in the trend.
All right. And I just love the entire post. The question now always seems to be, is this the top? And, based on your technicals, you're saying no. And we were debating this, the Korean crisis. No, it's not a crisis yet, but, these geopolitical events, stalemates in Washington. But you know what? The market just seems to shrug it off. So are you looking, we've had 14 out of 15 closes in the S&P 500 in a really narrow 6-point range. Do you have, whatever indicators you want to use, where's a point where you would say, hey, uncle, things are, maybe we're due for a little bit of a correction.
2450.
2450. Okay.
Yeah. Those were the highs. Those were the highs in June, right? So we had a peak in the beginning of March, right? March 1st, I believe, right? And then that broke out in the S&P 500 at the end of May. And we made a new peak, and that was in mid-June, right around that 2450. Then we consolidated some more for another month, and then we broke out in July above that 2450. So as long as we're above that 2450, we are still making higher highs and higher lows, that stair step higher, if you will. So that uncle point, the hey, we're no longer doing what we've been doing, would be if the S&Ps are under 2450, because that would be something new. It would not be that slinky, climbing the stairs, right?
Yep.
JC, you must be listening to our show. I actually was highlighting the 245 level in the SPY with the same exact argument about 5 minutes before you came on, and that's the exact same level for the same reasons.
Listen, guys, keep it simple, stupid, right?
Yeah, we're doing the same thing. This is good. I'm on your side here, JC.
I love it. I love it.
So, okay, let's break down to some individual stocks here, because it's always fun when we bring individual stocks to you. NVIDIA has been loved, and it's still loved, obviously. I've been saying this thing could go to 200. I don't know what your thoughts are on NVDA. I mean, this thing has had a hell of a run here. What are your thoughts, NVIDIA?
I mean, what is it? Is it the best performing stock in America? Something like that, right? Yeah, so... Listen, I think it really depends on your time horizon. You know, to be blindly going in and buying the strongest stock in the world, I mean, it's not the easiest thing to do. Now, the only way to guarantee that you own strong stocks is to buy strong stocks, right? So this is the mentality that we want to be having. We don't want to be getting cute and just going and shorting these things for absolutely no reason. To the contrary, you know, the fact that it's still making all-time highs is by definition, it's not a downtrend, right? So we want to be buying weakness in these names. So listen, I'm looking at this 164 level in the NVIDIA, you know, whether it holds or not, I can't tell you. But from a risk reward standpoint, that's the level. You know, if we're above 164, I think you can be long. From a trading standpoint, you know, this is a little too short term for me personally. I'd rather be a buyer down near 137 if we get down there. But if you're looking at this and you want to be in this right now and you want to be managing risk responsibly, I think that 164 level offers a good one. That's a key Fibonacci extension off of that consolidation throughout the first couple of months of the year. And yeah, we can get up towards above 200.
And the one consideration, though, it could be difficult to manage risk after tonight because it does report here after the bell. So always a little bit scary to be trading something technically, and then, you know, earnings come out and we know it can have a whoosh or, you know, or obviously a significant rally off of those reports.
There's no question, right? So again, getting back to your time horizon, you know, a lot of these moves, especially in similar stocks like this, the biggest moves come after these big earnings reports, right? So if you're avoiding them, you're missing a lot of these moves. I mean, we've seen that, right? But at the same time, if you're looking for an overnight trade, or if you're looking for something over a few days, and you're going to blindly buy into something, into a news event like this, you know, you're opening yourself up to more exposure than you might necessarily expose yourself to in other scenarios. So it really does get back to what is your time horizon and what are your overall goals. If this is a stock that you've owned because you think it's going over 200 and you've been in this for the last 100 points and you think it's going to 200, that's a different story, right? You're giving it more room. You're managing risk in your own way, not by day trading it going into earnings, right? So I really do think it depends on your time horizon, and I don't think that there's a clear answer for everybody, right? I think we need to respect that.
It's your appetite for risk, and that's, you know, going in the reports, there's big risk and big rewards. JC, I want to shift over to the crude oil market here. I'm looking basis of September futures. Nice little rally here. Dennis is bullish oil stocks for really no good reason. But that's no, he said no. There's nothing wrong with that. We've talked about, you know, owning some of these big oil stocks, ExxonMobil, Chevron. I mean, it's really been a sleepy period for crude. Could you give us a long-term and a short-term outlook for crude oil futures?
I mean, listen, it's a hot mess, right? I mean, this is you know, I talk about this constantly, recognizing uptrends, NVIDIA, right? Recognizing downtrends, oil stocks, and recognizing, you know, hot messes. And crude oil is that lack of trend is trend recognition in and of itself. And here we are looking at crude oil right at a flat 200-day moving average. I mean, if you guys want headaches, buy and short stocks that are trading near flat 200-day moving averages. I promise you. And listen, you know, you and I, we've been going at this stuff for years, right? On this radio show for years. And, you know, a lot of the things that we talk about are lessons that I've learned from my predecessors, guys like Rafa Campora, John Murphy, Charles Dow, Edwards and McGee. I mean, these are lessons that I learned from other guys. This one lesson is one that I had to learn the hard way because I kept having to get beat over the head with it until I finally realized stop trading damn stocks near flat 200-day moving averages, right? And it goes the same way for futures. And literally the crude oil is at a flat 200-day. So listen, this thing could go either way. In the short term, intermediate term, I mean, it's really a coin flip. From a bigger picture standpoint, this massive base that we've been putting in throughout 2015, throughout 2016, and into this year, you know, it's kind of a nice base. I'm not going to lie. So, but I've been saying that for months. So, you know, you really need, I mean, right? I've been saying that all year. It's a nice base. It doesn't mean that you need to buy it. But I do think that, you know, longer term, this big base, right? The bigger the base, the higher in space. I do think that we could potentially get back up into the 70s and 80s in oil. There's no question. The problem is, where do we enter? Let's say hypothetically we buy it today, right? Which I'm not going to, but let's say we buy it today. Where are we wrong? Where is the out? Are we wrong below 40? So now I'm gonna have 20% of risk to the downside before my uncle point, if you will. That doesn't make any sense to me. So I don't have a pivot point to trade off of where I can say, okay, if it falls below this, all bets are off. Crude oil is not giving us that right now. And the fact that there's no trend is evidence that we shouldn't be looking at it in the first place. So there is no trend and there is no risk reward skewed in our favor. So to me, it makes no sense. And not only that, if I never trade another crude oil future for the rest of my life, I will most likely live a longer life, right?
That's exactly.
You know what I'm saying? So like, I'm cool with not being in this market. You know,
JC Financials, they've caught a bit recently here again, some sniffing that the interest rates might be moving higher here. We saw Goldman catching a bit, breaking out over 230. Morgan Stanley's kind of moving up. Bank of America, the XLF itself has been kind of trending up here now. Are you following the trend here on the XLF?
Yeah, I mean, listen, I like the financials. Everything you guys mentioned, you're 100% right. I can't disagree with any of that. Yeah, I like it. You know, I think that if we're gonna be long in this market, I think financials is one of the places that we want to be long. You know, particularly, you know, everybody was talking about that quote unquote head and shoulders top in the XLF, right? That was supposed to break down in May and lead lower. You know, I saw clips that, you know, people were talking about it on the TV and on the Twitter, and everybody's, you know, head and shoulders this, head and shoulders that. You know, head and shoulders are very rare patterns. You know, these are by definition reversal patterns, and markets trend. So by looking for reversal patterns, you're essentially defeating the entire purpose of what we're trying to do here in the first place, which is identify the direction of the primary trend and trade with the wind at our backs, right? That's what technical analysis is for, to increase those probabilities. So by looking for these head and shoulders, these shampoo patterns, you know, they're super rare. So in all likelihood, it's not a reversal. It's actually a continuation of that trend. And in this case, that's precisely what happened. So we're continuing higher.
You know,
good one, Jason.
Only flakes play head and shoulders patterns is what I always say. JC, what other question
so
here?
Hold on. So, you know, from a risk reward standpoint, right, you know, we want to make sure that we're above those March highs, you know, even like that $25 level. If we're not above $25 in the XLF, then I think there's probably some trouble because momentum on these new highs didn't get overbought, right? So there's a potential divergence in financials. And you know me, I don't like to mess around with that. So, you know, I think the risk reward here is very well defined, $25. If we're above 25, I think we could be long financials. A few that stand out, Berkshire Hathaway. If we're above 170, I think we need to be long Berkshire Hathaway for a trade up to 200. You know, that's a good risk reward. If we're below 170 in Berkshire, then all bets are off. Same thing with Goldman Sachs, 220. If we're above 220 in Goldman, I think it's a long. I think we buy it to 270. That's 50 points to the upside. So
risk reward.
From a risk reward standpoint, it makes sense. But if we're starting to fall below 220 in Goldman Sachs, that's a problem. And we'd have to reevaluate that thesis for sure.
And one other question. Are the Dolphins going to win the Super Bowl?
Obviously.
Yeah, with Jay Cutler at the helm?
Yeah, baby, we're winning the Super Bowl. I've been waiting my whole life for this. I don't know, Cutler. I don't know. Smoking too many cigarettes. He doesn't seem interested. He doesn't seem like he cares. I mean, I don't know. I've been a Dolphins fan my whole life, so it's hard to get excited. Let's just say I'm excited it's football season coming up. How's that?
He's excited about the $10 million he gets for 1
What
year.
did you be?
Yeah. All right. We've been on the line with JC Parets. He's the author of All-Star Charts. He joins us. JC, great segment today. Very fired up. We appreciate the input. And I think that the biggest thing that people can take away is that very, very firm in your levels. You looked at the Goldman Sachs, you're looking at that 220 level. That's your uncle. And I think that's one thing with trading, high frequency trading, all the different charts and all the people make it complicated. And Dennis and I mentioned the keep it simple, stupid method as well. And we could tell you employ that. We are not going to wait so long to have you on again. Thanks a lot, JC.
All right, guys. Talk to you soon.
Thanks, JC.
All right. Let's see here. S&Ps are just hanging out here near the lows of the session. Crude continuing to chug higher here, up 61 cents. Dennis, Macy's, I don't know. Macy's may have a little bit of a bid in it here.
Just all over the place.
Yeah.
So the pop, the drop.
2205.
You look at Kohl's too.
Oh, boy.
So Kohl's has not caught a bid here. It's it's giving it back, but Macy's all over the place. So it's trying to figure out what it wants to do here. And poor Nordstrom, they report tonight, and they have no idea what to do here with this stock because Kohl's had the pop and the drop, and Macy's has reported. And obviously JWN wants to follow their lead, and it's like, oh well, we're seeing Macy's come back, but we're seeing Kohl's trade off still. So here's JWN just hanging out doing nothing. So 46.90 is just trading flat right now, but. We know we're going to hear from Nordstrom tonight, so maybe just give us a quick technical setup, at least on this. I know technicals take a back seat, but holy cow, this 46 level has been huge in JWN.
Let's take a look at the dailies. To talk about going private has kind of subsided. 46, some institution like it, you got to even give it a little room, even if it takes out 46, because there's just some lows in the 45 handle. But on the upside, your bogey is $50. I mean, look at that. It was over 50 in May before you broke down, and then you went down under 40, came back just over 50. So if you're waiting to buy this thing on strength, not trying to be a bottom picker, believe me, this has kept me out of a lot of stocks. Wait for it to get above 50, hold 50, and that could be quite some time here as we're coming up to the earnings report.
And these things can do some funny things intraday as well. Like look at what you pointed out to me on the pre-market show, Joel, TripAdvisor. I mean, we were talking on the pre-market show yesterday how the TripAdvisor numbers were pretty good, and then they hit it because of Priceline. Well, then all of a sudden, during the day, they actually hit Trip almost down to that support level at 36. And look what happened. It turned around and it caught a bid hard. And they bought that thing all day up over $40. So obviously when the opposite direction of Priceline then, the report was okay. And that's, what they were rewarded for it, I guess, at the end of the day. But, the shakeout was vicious. If you thought those numbers were good and you're like, I think this thing's coming back, it rolled down to 36.5. I wouldn't be able
35,
to take
55.
35.5. 35.5. I'm mistaken.
Yeah.
That was right at that support level.
Yep.
So it's funny how these levels come into play, though. You get these levels, these hardcore, even off fundamental news, those technical support levels sometimes come into play from a major perspective. And that definitely came into play yesterday in Trip.
Yeah, we did have that 534 low and got right in that area. Just one other stock we're looking backwards. I mean, look at, you talk about technical levels, and boy, I wish I would have played this one. Valiant, had that. I don't know. It didn't even look like a great earnings report to me. I don't know why they popped it up so much, but they popped it up near 17.
The VRX.
Yep. Triple top, just under 17, a high above 17. And now you're in a chance of going under $14 here. So that's a huge percentage loss. And I'm sure the Teva and the Mylan, I think, they're kind of peers. But Dennis, when are you getting along Teva Pharmaceuticals here?
Nope. Nope. And Teva still goes straight down. Mylan caught a bid yesterday and, ended up when we were saying that, it was looking like, it had got hit down like $28 and it was coming back a little bit on the show and it looked like it could be on the comeback trail. And it did. It got it all back. Teva still goes down. It was up in sympathy with Mylan, and Mylan continued to rally. And then they said, no, we're still selling Teva. That dividend cut just killed it. I mean, when they cut the dividend, that was it, and it's been straight down ever since. This thing has had 5 red candles in a row. Why am I going to try to call the bottom on it? Take your, words from JC, who was just on here. He ain't coming here trying to call the bottom on where Teva stopped and go down. This is not just a downtrend. This is an epic collapse here. Is it going to bounce eventually? Sure it is. But am I going to be the hero and be able to call that level? It would be just luck if I was to pick up Teva and it bounced from this level, because nobody knows where that thing's going to bounce. I mean, you can go to the technicals, you can try to find levels, but we haven't been down here. We ever been down this low on Teva? I'm looking at a monthly 10-year chart, not 10 years.
If I would have asked JC about this chart, he might have hung up on me.
So it's so difficult, but it's a natural human tendency to want to come in here and say, oh, this stock is down so much, it's got to come back. It doesn't have to do anything. It doesn't have to come back at all. And a lot of times the best trade actually is just to say, hey, this is really bad news when the thing's at 25 and it's not probably going back to 26, 27 anytime soon. And that means the easiest path of least resistance is down. And you have so many people who are just dumping that thing. They were in it for the dividend. They're getting out. There's debt issues here. There's so many different issues here. I mean, we don't know. This could be the next Valiant. They don't start selling stuff fast. This could be in trouble. Like, this could be, the potential of, a lot worse than 17 and a half. So when you got these major debt problems, and we saw what happened with VRX when it was 250, and people are trying to call the bottom at 50, or trying to call the bottom at 200, and then 150, and then 100, and then $50, and now it's at $14. And people are saying, oh, the chart looks good at 17. I mean, let's look at this chart overall. Things from 250, really, when you put a long-term perspective on this Valiant chart still looks like real bad. Now, $14, it's come back down to a level that I talked about before. Can I have a technical bounce around this level? Yeah, but, is there really much in there? 12 looks like a better number to me than 14. But, we're still trying to, call a bottom here, and that is a difficult thing to do.
Yep. Teva, I don't have it at an all-time low. I do have 1607. That was your low back in October 2002. That's according to my TradeStation platform. So if you are, and I'm not saying to go long, but if you're looking to cover a short here, the ranges have finally calmed down yesterday. Had some big ranges when it got whacked. A 3-point range, another nearly 3-point range, almost a 2-point range. And then yesterday was about $1.30. And then yesterday it narrowed into $1 range. So to me, the sellers, I'm not saying everybody's out, but you might be getting a little bit of seller's exhaustion here. Best you can hope for is maybe a double bottom and, a little bit of consolidation to the dead cat bounce. But just the fact that the ranges are contracting makes me think we may be hitting just a short-term bottom here in Teva, T-E-V-A. Dennis, we got 2 minutes left. We missed some earnings reports. We didn't do.
Well, Spinner wants to know what CMG. I'm still going to say I think it's under $300. I think this is eventually going under $300. I don't know the path that it's going to get there, but I think when the dust settles and we look at this thing 6 months from now, I think sometime in the next quarter that they're going to warn again. I think this is going sub 300. So I'm staying bearish CMG. Spinner's saying that they closed the store that had the rats. I'm not sure. I haven't seen that. And the headlines go by, but I wasn't looking for it either. Obviously, that news was a while ago that the store had the rats. I didn't know if they've actually closed the store now, but that's scary if that is true. Stock is trading down 4 points here, so maybe there is some truth to this as well. I mean, this is just, again, definition of a downtrend. And trying to be a hero and saying this is the bottom. First is a valuation issue. Secondly, there's fundamental issues here. I mean, people did get sick just a little while ago. This is a confidence issue thing. There's so many reasons not to own this thing. Is that the reasons to come in here and short it now? I don't know. But I think it's going under $300.
336.52. That was the initial panic low, and then it jogged around, had after earnings and stuff. 37.50 though. That was your big bogey, and the day that you took that out, that was on Tuesday is when you got the big down move. So let's see here. Pre-market trading, you did get a spike down to 328.88. All right, Spencer.
Blue Apron.
Blue Apron? Okay, let's do Blue Apron.
Give us the earnings here. They're obviously a disaster. Stock's down another 14% here. APRN.
Oh, yeah.
Wow. This has got to be one of the worst IPOs of all time.
Oh, yeah. 47-cent loss versus a 30-cent loss. Estimate sales of 238.1 mil versus 235.8 mil. So they missed on the sales and a pretty big miss on the EPS. This IPO has been bad.
Disaster. I mean, ever since it came out, they kept lowering the price, and then it comes out at 10, and then it's just been straight down ever since. Now you're making new all-time lows here again. I always say when stocks are making new lows, you got to go. You don't want to be long these things again. If you're just coming in here, you're trying to call a bottom. It's a hard game to do. You're going to get it every once in a while if you keep trying to call bottoms. It's by luck. But, if you're using the levels and stuff, sometimes it can help too. But so difficult to just come in here and successfully pick bottoms all the time. So 533, 535, it's down 14%. I want no part of this. I'm a seller of all rallies.
$5, maybe psychological level.
Yeah, there you go.
So no
bounce
though.
Call about, for sure. Could have bounced
No,
for sure.
No
Did it? What is the pre-market low?
It's trading right on the lows of the pre-market session. The lows 30.
I think it's going to 5. It wants to go to 5. But.
Yeah, wow, 32 and 33. Actually, it's trading at 532 right now. Lows of the pre-market session. Spencer, wow, busy show today. A lot of great content. Mark Chaikin, JC Parets, you want to wrap things up and give us a preview of the final show of the week?
Yeah, looking ahead to tomorrow, it was a busy show today. On the docket for tomorrow, we're looking at Todd Sullivan. Right, Joel? We got him on the docket, and potentially Nick Shaheen as well. Nick did survive the hurricane.
Nick, where are you?
He survived the hurricane, so he will be back with us, if not Friday, then next week. But once again, want to remind you to catch our podcast. We're on iTunes, SoundCloud, and Stitcher. You can also re-listen to the show as it aired live on YouTube, youtube.com/Benzinga TV. We are coming up now just over a month away from the Benzinga FinTech Summit in San Francisco. September 28th is the day. Go to bzsummit.com to learn how you can attend that. All right, that is it for us. So have a good rest of your day, folks. Good luck out there. Have fun. We'll be back with you on Friday.